Welcome into another Tax Talker. We're continuing our summer tax problem series. You owe the IRS and can't pay them right now. Whether you filed in April and still haven't paid, or you haven't filed because you're too scared of that big bill, or you got an IRS notice saying you owe more money. In this video, I'll walk you through how to proceed. What are your options right now and what not to do? Let's get into it. The most important thing right off the bat is you need to file your tax return. If you haven't filed for the 2025 tax year, we're sitting here in August of 2026, hopefully you have an extension on file that gives you an automatic extension until October 15th. If you don't have an extension, you should file right away. That should be the number one thing you do. If you do have an extension on file, this did not extend the time to pay, but if you're watching this video, it's because you didn't have the money then, you still don't have the money now. But the problem with not filing your return is the IRS charges a separate, much higher penalty called failure to file penalty. That's 5% per month of an unfiled tax return. Compare that with the failure to pay penalty, and that's 0.5% per month. So refusing to file because you can't actually pay the tax balance is actually making it 10 times more expensive. But this does raise the question, okay, but what do I pay? I'm filing the return and saying I have a balance due. What do I pay? The answer is pay what you can reasonably afford. If that's zero, pay zero right now and just get the return filed. But if you have some amount, go ahead and pay that. Even if your balance is $6,000 and you have $2,000, go ahead and pay the $2,000. Now, what about that balance due? So whether you paid something but not the whole amount, or you didn't pay anything, what are your options? That's going to depend on what your timeline is. If we're talking a matter of months, specifically less than 180 days, roughly 6 months, the IRS allows a short-term payment option. You can utilize it as long as the balance owed between tax, interest, penalties is less than $100,000. You can get that set up online. There's no setup fee, and it will reduce further interest and penalty exposure. Those do accumulate. This is by far the best solution for someone with a temporary cash flow issue. Now let's say 6 months isn't realistic. The next step is an IRS installment agreement. Many individuals can qualify for this long-term plan without submitting extensive financial detail to the IRS. You select a monthly payment and a payment date and get on a plan to pay this balance off. I strongly suggest you use direct debit and don't let this plan get screwed up by missed payments. Don't give yourself flexibility on it. There is a setup fee, but this is gonna drop the overall penalty and interest exposure significantly, and it is usually worth it. If you're not gonna be paying anyway, you definitely should get something like this set up. I also strongly recommend creating an online IRS account. All individuals can have one of these regardless of a balance due problem, but this helps see the balance due, see the payments you've made. This is much better than trying to reconstruct your balance due from a pile of notices 6 months from now. And what if you can't even afford the installment plan? You say, I can't pay my tax. If those robocalls promising you pennies on the dollar for tax settlements, if that's looking enticing to you, let's talk through what really are your options here. That's gonna take a very specific set of financial circumstances. We're talking like you owe $40,000 and after reasonable necessity level living expenses, you have very little to nothing to pay that $40,000, then you have a legitimate financial hardship. And this is a tax debt problem, meaning you don't have actual funds to pay the outstanding debt. In these instances, there are other options to consider. The IRS will temporarily delay collection when payments create a legitimate financial hardship. You will get put into a currently not collectible status. In some circumstances, you can qualify for an offer in compromise. And in this case, you are settling your tax debt for less than the full amount of tax liability. But these are not shortcuts and they're not easy. The IRS is going to be looking at your financial situation in detail. They're going to be assessing your income, your expenses, your assets, your ability to pay. This is definitely where I would stop trying to solve this problem with a YouTube video. And you're going to want to talk to a qualified tax professional. You want to be very careful with just going with a random debt consolidator or some company promising to solve this for pennies on the dollar. Offers in compromise are real, and it does help to have a professional help navigating you through that. But it is going to come down to your actual specific circumstances. Specifically, you're looking for a professional, probably a CPA, an enrolled agent, or an attorney who specifically deals with IRS collection issues. That is the Tax Talker for today. Remember the order of operations. First, file your tax return, regardless of whether you can pay. It's always good to pay whatever you can at the moment, even if it's not the full balance due. From there, it's a question. Can I pay this within 180 days? Okay, well then go online and set up a short-term payment plan. If not, if it's going to take longer than that, set up an installment agreement. In much rarer circumstances, would I suggest looking into financial hardship, putting you in unable to collect status, or even seeking out an offer in compromise. Certainly don't do nothing. You have options in all these instances. Thanks for watching. See you next time.